Coming up in this show, I'll bring you my opening comments on the markets. Katie has trade planning with options. She's going to bring you an option trade setup in crude oil. I'm going to bring you a hot minute. That's an update on the analysis that I shared on NVIDIA last week. And then I'll bring you my analysis on the stock market, the failure of the bounce, and trouble into October.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks, and hopefully great opportunities for you throughout this show. Well, the stock market got a rebound going last week, that is through Thursday morning, as investors positioned for what they were sure were great earnings from NVIDIA. Well, they got what they wanted. NVIDIA's earnings were fantastic. But investors got a taste of what was baked in the cake, as NVIDIA gave up a 30-point gain, actually moving even lower here on Friday, and the S&P 500 on Thursday went from over 40 points on the upside to finish down about 60 points. The week was filled with poor negative data. New home sales, they fell to the lowest since 2010, and the Philly Fed was very weak, as they said not only was there weakness, but prices paid were up. And there's your whiff of stagflation. PMIs in the Eurozone and UK were also weak, and the bond market took heart, finally rallying, and that helped stock market early in the week. Also, several retail stocks cratered. Dollar Tree, Dick's, Foot Locker cratered huge, over 30%. That took down Nike and Skechers, and Macy's also had a bad time of it. As the consumer spends the rest of the pandemic stimulus, if they have any of it left, then the credit card debt, well, that begins to go up as they run out of money, and we're seeing that now, as there is now $1 trillion in credit card debt, which is a record. The consumer is 70% of the economy, and as prices go up and they run out of money and they take on more credit card debt, well, what comes is austerity, and we think that is ahead as the consumer pulls back. And that's why you're having these declines in the retail stocks. The XLK, which is the retail ETF, we think that's going down, and maybe significantly through late September. That's in alignment with our stock market analysis. On Friday, well, everybody was waiting for Powell's Jackson Hole speech, and he said that they were prepared to raise rates further because of inflation. They said they would proceed carefully. What they did say is that there may be a drag on the economy from past tightening, and credit conditions were tightening as a result, and that would help. But the reasons for hiking would be the GDP is still strong. And that trend of strong GDP is not really going away. Housing is picking up instead of pulling back, and the labor market is still tight, 3.5%. And that's was easing a bit, but it is not anymore. He also said, and this was very important, 2% is the target. Those people that are in fantasy land thinking that they were going to adjust their target to 3%, well, he put an end to those thoughts, and they've already lost their credibility in a massive way. They're not about to lose more credibility by fudging with those numbers, so that's not being adjusted. And he also admit that they really don't know and they're confused. While Powell spoke, the indexes moved up sharply. Bulls are anxious to buy, as you can see, but our work continues to warn that these upside pops will fail. Don't hear that as that we see the end of this cyclical bull market. That's probably not going to come until sometime next year. Yet risks are high. Now, this correction has more to go. And as we warned the past few weeks, don't get hooked by the upside moves because they're very likely to fail, and those are selling opportunities. For investors, you may be comfortable sitting through a 10 or 13% correction, but what if it's more? It is a win-win if you sell on these pops, because either you raised cash if it has a very big decline, or if the market goes back up and holds, well, you're still long. There's your win-win. For the week, the stock market indexes kind of mixed. The S&P 500 and NASDAQ small gains, the Russell and the Dow small losses. Bond market around unchanged, the 10 years up about 2 basis points on the yield. Gold market gains $15 and silver up $1.15, and that is a much improved pattern. Silver may be the one to lead the metals into better patterns, better rallies as we look forward. The dollar, it continues to be very strong. Now, we have a key number right around 114.60. If it gets above that, our very bearish analysis will change in some way. Not to bullish, but at least less bearish for sure. So we're looking at that key number, and the dollar is very strong as the interest rates remain strong in this country. Oil market loses about 95 cents. Katie has got some great analysis coming up. And if you want to see all of our analysis in the futures markets, be sure that you go to our website, sign up for at least level 2, and you can watch the Future Speak show every single Wednesday. And I think you'll find that just amazing. If you want to get acquainted with us, sign up for level 1, just $45 for 3 months. You'll get information from us every single day, especially the index analysis. On YouTube, subscribe to the channel, click the notification bell, and like this video. Give it a thumbs up. On X, follow us at askSlim. Questions you have on what I'm presenting, anything about our education and analysis, on our memberships, write to Matt at askSlim.com. Trade planning with options. Katie's going to share analysis on light crude, which is short-term negative. And she talked about a key level where you could enter on the shorts side, and that was actually hit today. You're going to find this really great. You're just going to illustrate putting on an option trade using Tasty Trade. Katie, please show them this great analysis.
Hi, this is Katie with askSlim, and this is a trade planning with options video on August 24th, 2023. Today we're going to look at a defined risk long premium trade idea in crude oil futures. First, our legal disclaimer: the options trades that I demo and follow up on are trade ideas. When I talk about closing, adjusting, or managing them, I'm educating around management techniques, best practices, theories around risk management and profit taking, and highlighting aspects of options trading that we encounter as we follow the trade ideas. This disclaimer is specifically related to options trading. For full legal information, please go to the askSlim website or email Matt at askSlim.com. Let's get started. Here is the weekly chart of light crude future, symbol /CL. We have a very large 78-bar cycle showing the dominant money flow pattern, and that is broken into minor thirds of 26 bars, and those are further broken down into minor halves of 13 bars. Those are harmonic families. Now, these are a drawing tool, but you can see how the actual cycles played out up above. They're outlined here in blue. Very clear patterns. So what you'll notice now is that next week we're going to be entering the weekly cycle timing window. That's a period of time shown by these blue vertical dashed lines. It runs from August 28th to October 6th, and that is a period of time when we expect this cycle right here to pull back and make a low before moving up again into the rising phase of the next cycle. Now, the current cycle looks as though it will be positively configured, meaning it will likely end higher than where it began. And it also has a right-hand translation, meaning that the cycle peak came over here on the right-hand side near the end of the cycle, leaving less time for a pullback. Now, these are bullish conditions. Slim has a notation down here that this is a base. So that is a positively configured cycle that occurs after one or more negatively configured cycles. So this suggests that the subsequent cycle is likely to take out this high, and you can see our projections over here. So we're looking for a short-term pullback and then up again. Now momentum is positive in here with our proprietary momentum indicator, the reversal scout. That is this green and purple ribbon. It is still green. It's beginning to curl over just a little bit. Now again, the ideal cycle timing window dates are August 28th to October 6th. Let's switch over to the daily chart. Here on the daily chart, notice that we have just passed through this daily cycle timing window. It ended on August 17th. We believe crude oil made a low here and then began to move up, but has broken down already. That would make sense because this current daily cycle is in sync with the weekly cycle timing window. What does that mean? Well, this daily cycle is due to end between September 27th and October 5th. That fits within that weekly cycle timing window. That's what it means when we say they are in sync. And those cycles in any symbol are expected to exhibit weakness and possibly even breakdowns as we form that intermediate and short-term low. So although this could be a late low forming, the more likely scenario is that this is exhibiting the weakness and breakdown that we are expecting to see in this cycle. Momentum has turned negative in this time frame with the reversal scout purple, and the slim ribbon has gone from positive to neutral. Now, if this is a left-hand translation and breakdown, then we would not expect crude to take out this high right here, the high of that candle at 81.75. So what we're looking for now is for crude oil to bounce up into this resistance zone. It runs from about 79 on the bottom to 80 on the top, with this 78.6% fib at about 81. If crude oil gets back above 81, that will cause us to reevaluate the trade idea. So what I've just shown you on those two charts is highlighted on one of our askSlim tools called the Cycle Low Timing Tracker. Notice that /CL is located down here on the bottom right in the in sync box to show that the current daily cycle fits within that weekly cycle timing window. It's also shown over here in the late breakdown box for the daily time frame to show the possibility that the daily cycle is running late. These gray boxes on the bottom represent uncertainty. However, the longer that crude oil continues on the downside, the greater likelihood that it's a breakdown, especially since it's also in the in sync box. Now we're going to go over to Tasty Trade, where I'm going to demonstrate a bearish options trade idea to take advantage of this bearish hypothesis going to the end of September, beginning of October. But first, go to the askSlim homepage, hover over that Marketing Partners tab, and click on Tasty Trade. That will take you to a page where you can learn more about our preferred options trading platform. If you choose to open an account with them through our link, that helps you with some special bonuses, and it also helps us, so please consider doing that. Now over to Tasty Trade. I have crude oil loaded in here, symbol /CL. We mentioned the late September, early October time frame. None of these available expiration cycles fit perfectly, so we're going to use this September 15th expiration cycle. Also, note that IV rank is very low. That would suggest a long premium trade idea which will benefit from an increase in volatility. Now, as I mentioned, if we are exhibiting a left-hand translation and breakdown, we wouldn't expect crude oil to make it back up over 81.75. So I'm going to demonstrate a put debit spread. Now keep in mind that we are waiting for a bounce up into the resistance zone, so the strikes may be different at the time that we activate the trade. But if we were entering this trade right now, we would buy an in-the-money put, let's say the 79 put, and then we would sell an out-of-the-money put to reduce our cost basis. You can go as far away as you like, but I'm going to sell that 78 put. Now, this is a $1 wide spread, but the notional on crude oil futures is 1,000. So this $1 wide spread is actually worth $1,000. The debit paid shows 47 cents. Multiplying that by 1,000 means you're paying a debit of $470. That's also your max loss and capital requirement. Max profit then is the difference between that and the $1,000 that the spread is worth, so in this case $530. The probability of profit is right around 50%. Now here is the risk graph. With the profit zone in green, we want crude oil to move lower. Now again, the best time to place this trade is on a bounce up around that $80 range and then a signal on the lower time frame chart, say the 2-hour chart, showing momentum shifting back to the downside. So that's our trade planning with options video today. As always, please feel free to reach out on Discord or via email to katie@askSlim.com if you have any questions or feedback.
This is a hot minute update on NVIDIA. After blowout earnings and a $25 billion buyback, the stock soars and then leaves a Marubozu top. We'll look at that. And of course, this is an update because last week we gave a bearish scenario. This week, it's also a bearish scenario, but not as bearish as what we thought was the highest probability did not happen. Let's take a look here as we look at this chart. And you will see here that the NVIDIA chart pattern, as we had right over here on the daily chart, showed, and you could see this gray area right over there, that projection, that there was a possibility that it would form a head and shoulders top. That did not happen. And what happened was the stock soared on earnings that were much better than expected. They were really blowout earnings, as the revenues just were massive. And of course, earnings beat by a lot, and they issued a $25 billion buyback of the stock. Of course, they're buying back the stock at $500 a share approximately, or a little bit less, which is a real high price and a real word of optimism. Still, what we have here on our analysis is suggestive that that is an important top. Usually when you get this Marubozu right over here, as you see, that's called a Marubozu, is Japanese for shaven head. Usually what that means is that it is a reversal pattern, and the stock is likely not to be able to surpass that pattern, those highs, for a while. Right now, you can see that what this does is it raises the downside projection, but still we're in this period over here where it is likely to fall. The ideal trough comes out to mid-October, as we said last week, and this stock is likely to pull back here under this level of about 465, maybe down to about 440, get probably another rally, and then get into the support zone that is just under $400. That's how it appears here on the weekly chart and here on the daily. So we're going to look for this to be an important trading top, and it being in a period of downward chop till it gets back down to about 400 into this period into mid-October. That is our update in what is a very, very powerful stock and still likely to correct. Stock market analysis. But first, see our analysis and huge content. We have only 3 more days left in this special trial offer for level 3, which is education, analysis, and support for traders and active investors. Take a look. Just go to askSlim.com, go up to that website, and you will be able to see all of the information and our special discounts on a 1- and 3-month trial. There's a link up at the top of the page. You can see that arrow that's pointing you there to sign up now. That'll actually take you to some information about everything that's in here. There's like 10 different areas of our content that is included. It is just enormous and fantastic. You can get 35% off by taking a 3-month subscription. That's going to save you $125. And if you take a 1-month trial, it's 50% off. You pay only $59.50 for all of that massive amount of education and content there, and you'll get a good idea for what we're offering. So click that sign up now button, and then it will give you all the information. And then there's a link there to sign up for either of these if you want to do that. So if you're a trader active in the markets or an investor, self-directed, this is just fantastic information for you. Stock market analysis and projections on the S&P 500. Some important information. First, please do read this slide and you get an idea of our approach to analysis and what that means for you as you use our information. If you scroll forward and you are right now just watching a clip, go back, watch the full show. I'm going to bring you my comments on the markets, which I think you'll find interesting. Katie's going to share with you trade planning with options, where she looks at crude oil at a bearish setup. And then I'll bring you our hot minute update on NVIDIA, which I think you're going to find also quite interesting. Stock market, S&P 500. We're going to look at a short-term view on the SPX and this rejection at important resistances. We're also going to take a look at some complementary analysis looking at SMH, and I'll show you our futures hub, which you can get a ton of information on and really expand on what I'm showing you right now. Let's take a look as we switch over to the daily chart on SPX. So for those of you that are members, you've been notified that there was a slight little shift in here where we expanded these cycle brackets by the minimal amount and shifted them a little bit to the right. We get that information by the magnitude of this advance in here. We thought originally that it would get up maybe to about 410 to 440, and then RV said around 463. It actually got to this high here about 458. So it's in an area of rising phases right here. What's really interesting for those of you that are students of this work is that the dominant cycle right over here has got two minor halves, as you can see. And you can see the beautiful way this lines up right over there with these two time cycle lines showing you about the point in the middle where it should ideally have that trough, the bottom in there. And it comes down in here and hits the 161.8 or right near that, and then tries to get up. Of course, this is that reversal on NVIDIA, and I showed that chart earlier in the show if you want to go watch the full show, and that big reversal right there. That is very likely going to be the high that we're going to see in this upward attempt in a rebound. And here it may try again early next week to get up to these levels, but you can see our analysis is suggesting that this minor cycle right over here will get it to take up below this low. And if it gets below 43, 35, 31, it could really accelerate to the downside. Targets right now are at around just over 4,200 and around 4,120 right over there. And then this next rebound right over here is likely to fail and then come down and maybe even get under 4,000. Our intermediate cycle analysis, which I'm not putting up right now, but you can see it on our charts, and I'll show you how in just a moment, that is pointing still to a decline out into the mid-October time frame. Now, one thing that is really interesting in here is that this is the RUT cycle, R-U-T, and you can see the beauty of how overlaying this, where it actually becomes minor thirds in the dominant harmonics right there, is just fantastic. Look how this low lines up, this low lines up, this low lines up right there. These are where actually the patterns are in the Russell, and all of them right over here are syncing up to lows there and then getting this rally. So right over here where the Russell turns down, right over here where where there's likely a decline in the S&P 500, also aligns with the NASDAQ. So this is a period in here where we're in a minor rebound, and I keep warning that because of the conditions that are in here of negative momentum, this is the slim ribbon right over there. This is the slim ribbon PO, which gives you the warning that momentum is regaining its energy on the downside there. You can see where it did it there. Look what it was doing on the upside. Positive, positive, positive as the market kept moving up. This is a very important indicator to have. Level 4 members only get this. And you can write to Matt at askSlim.com to find out how to get the slim ribbon PO. Now, the projection in here is such that there's some room in here, and a range between this 44.70, this 43.35, that it could be bouncing up in here and down for a little while before it then does turn down. But again, under 43.35.31, that is a negative warning, and it could actually accelerate to the downside. I want to switch over now and look at the SMH, because I think this is really important, because it is really the SMH that is very much leading the market, as we saw the big reversal there in NVIDIA and in a lot of those semiconductor stocks. Look at that big reversal that you see right over here. That is really important. And it really says that those stocks that have been leadership stocks moving to the upside are likely to fail. If you get below this level over here, that low being 143.35, that is going to give you the potential for an acceleration down into these support levels. And this low right over here is expected mid-September, and then this low right over here is expected to be in that next cycle somewhere around mid-October. If I show you the weekly chart in here, let me just put up our weekly analysis. That's what it looks like without our analysis, and this is what it looks like with our analysis. This then points out in the SMH over to this low in mid-October. This is very much in alignment with what we're seeing in the major markets. So the downward turn in momentum here is giving you the negative conditions and why these are failing. This is likely to get down here to 135 or lower. Here's that daily chart again. So 135 is where this fib extension is down over here. So that's what we're really looking for. Lower prices, and these market leaders, these semiconductors now being in a negative condition. Look on the bottom, the slim ribbon PO, and you can see that right there, and that's giving you all of those negative momentum signals, which says the upside is likely to fail and that the downside is likely to command. That means sellers in command, and you can see right over here where buyers were in command. Again, really having this slim ribbon PO is just a huge help when you do your analysis. So that is a look, as you can see, the side-by-side here in the semiconductors right there, which are giving quite negative conditions. Let's switch over. I want to look now at the futures hub. This is how you get more of our information. This is for level 3 and 4 members. Level 4 members get our live charts. Level 3 members get these updated charts whenever there's an update to do. And you can see in here, see that little message right over there. This is my comments that I put out whenever I do these updates, and you're going to want to read those on a regular basis. And here, if I click on the S&P 500, here's that weekly chart. I'll just click on it and blow it up right over here, and you can see that negative momentum there. I didn't show you that the chart on the other charts. I just wanted to show you what this looked like right over here. So that's the S&P 500 weekly, pointing to a decline out into October. So yes, you can get this. You get the daily chart right over there. You can get our video analysis right there, and from the Future Speak show that RV presents, all the technical details. And for level 4 members, this takes you right to the chart link right over there. So that's the weekly chart. So if you're interested in all of these markets, there's 26 different markets that we have information on. then I think you will find it absolutely valuable in all of these markets. You get all that information, my comments right over there, all of the charts in all of these markets. Let's go back for 1 second just to the NASDAQ right over here, and I want to go to the daily chart. And one of the things I want to show you, you look on the bottom here, our option bias indicator right there, and you could see that failure right there yesterday. The option bias indicator is the first time negative since January. It stayed positive. This told you to bias your positions long when you were an option trader or a swing trader. You could still use it for that. And this is what it's telling you right now, that the conditions are very negative. And of course, that's available on all of the charts that we share here in the Futures Hub. So please do consider becoming an level 3 member and getting this just great information that you get in our Futures Hub. That's what I wanted to show you today in the stock market. You see that alignment that says that rallies are very likely to fail. We're getting a confirmation on that looking at the leadership in the semiconductor stocks. And as I said, NVIDIA is still falling. NVIDIA still falling to the downside after that big upside pop, trading well over 500, now trading at 451 here at midday on Friday, and just a warning that that'll try to pop, it'll try to rally, so will the market, and very likely to keep failing. Big risk, I believe, down into the mid-October time frame. We talked about this well before this happened, that this was the timing for the period of risk. And that's where we are right now. Make sure that you do go to our website and sign up for level 3. Get that Futures Hub and all of the other 9 fantastic areas on our site that bring you information updated regularly. You'll get all 600 of our videos that are in there. It's just amazing. You'll be on Discord, be able to ask questions of the team. Get our new market condition monitor. I can't list it all. You got to go in there and look at it. It's just fantastic. I'm so excited about everything that brings to you. So please go to askSlim.com. And if you just want to sign up for level 1 to begin getting a taste of what we do, $45 for 3 months, do that. On YouTube, subscribe to our channel, like the video, give it a thumbs up, and watch our member videos in the playlists. On X, follow us at askSlim. And any questions you have on everything that I presented, please go to your email and write Matt at askSlim.com, and he'll give you all the information you need on our memberships or our huge offering of education and analysis. That's it. I want you to be so careful because it is so crazy out there. And I'm always wishing you great trading.